Florida, land of sunshine, beaches, and an absolutely bonkers home insurance market. We're not talking your usual, oh, my rates went up a bit kind of situation. We're talking premiums soaring higher than a SpaceX rocket, leaving homeowners sweating more than a tourist in a Mickey Mouse costume in July. It's a full-blown crisis, folks, and it's hitting Floridians right where it hurts, their wallets. Imagine this. You've worked hard, saved up, and finally bought your slice of the American dream. But instead of kicking back and enjoying the Florida lifestyle, you're stuck staring at an insurance bill that looks like it belongs to Elon Musk. This isn't just a case of insurance companies being greedy, though, let's be honest, they're not exactly known for their charity. There are some very real reasons behind this insurance apocalypse, and unfortunately for Floridians, they're caught right in the middle of it. So, buckle up, because we're about to dive deep into the murky waters of Florida's home insurance crisis. And trust us, you're gonna want to pay attention. This could be your house we're talking about. Let's face it, living in Florida is a bit like playing roulette with Mother Nature. Sure, the beaches are beautiful, but those ocean views come with a hefty price tag, especially when you consider the word hurricane is practically Florida's state motto. See, insurance companies are all about assessing risk, and when it comes to Florida, particularly those areas hugging the coastline, the risk is about as subtle as a Category 5 hurricane making landfall. They look at the potential for damage, and well, let's just say they don't like the odds. This is where things get even more complicated. Enter surplus line insurers. These are like the insurance world's version of those payday loan places. They swoop in when no one else wants to touch you, but they charge you an arm and a leg for the privilege. And the kicker? They're not subject to the same regulations as traditional insurers. So not only are Floridians in high-risk areas facing astronomical premiums from regular insurers, but they're also getting squeezed by these unregulated surplus line companies. It's like getting hit by a hurricane and then mugged in the aftermath. Not exactly the sunshine and rainbows Florida tourism brochures promised, is it? Faced with these sky-high premiums, some Floridians are taking a page out of the desperate times, desperate measures playbook. They're ditching traditional insurance altogether and going rogue, opting to self-insure their homes. We're talking about 15 to 20% of homeowners here, folks. That's not a small number. These are people who are essentially rolling the dice, betting that a catastrophic event won't wipe out their life savings. Now you might be thinking, are these people insane? Have they not seen the day after tomorrow? And honestly, it's a valid question. But before we judge, let's try to understand the desperation fueling this trend. For many Floridians, it's not a matter of to self-insure, it's a matter of two. When your choice is between paying an outrageous insurance premium or putting food on the table, sometimes you have to make the risky call. But is it a risk worth taking? That's the million-dollar question, and the answer, as with most things in life, is a resounding it depends. Okay, let's be real. There aren't a ton of upsides to self-insuring your home, especially in a hurricane-prone state like Florida. It's like choosing to walk a tightrope over a pool of hungry alligators. Sure, you might make it across, but the odds aren't exactly in your favor. That being said, there are a couple of potential benefits for those brave, or perhaps foolish, enough to consider it. First and foremost, you'll save a boatload of money on premiums. We're talking potentially thousands of dollars a year. That's money you can use for other things, like, actually enjoying life in the Sunshine State. Second, self-insuring gives you more control over your finances. You're not at the mercy of an insurance company's whims when it comes to setting premiums or deciding what's covered. You're the master of your own destiny, or at least your own bank account. But before you start celebrating your newfound financial freedom, remember that these potential upsides come with a massive asterisk. And that asterisk is basically a giant neon sign flashing high risk. Alright, let's talk about the elephant in the room, the potential downsides of self-insuring. And spoiler alert, they're about as subtle as a Category 5 hurricane. First and foremost, you're on the hook for everything. And we mean, imagine a hurricane rips through your neighborhood, leaving your house looking like it went through a blender. With traditional insurance, you'd file a claim, pay your deductible, and the insurance company would foot the rest of the bill. But with self-insurance, you're the insurance company. You're responsible for every single penny of those repairs. And trust us, those costs can add up faster than you can say climate change. Second, self-insuring doesn't just cover the big stuff like hurricanes. It also includes things like fires, theft, and even liability if someone gets hurt on your property. So if your neighbor trips over your welcome mat and decides to sue, you're on your own there, buddy. In short, self-insuring is like playing financial Russian roulette. You might get lucky for a while, but eventually that chamber is going to be loaded. And when it is, you better hope you've got deep pockets. Section 6. When disaster strikes, real-life stories and expert opinions. Okay, enough hypotheticals. Let's talk about what happens when self-insurance goes wrong, because spoiler alert, it often does. And when it does, it's not pretty. Take, for example, the story of John and Mary Smith. Names have been changed to protect the financially devastated. They were Florida homeowners who decided to self-insure, convinced that they could beat the odds. Then Hurricane Irma hit. Their house? Totaled. Their savings? Decimated. Their dreams of a comfortable retirement? Sunk faster than a sandcastle in a tsunami. And it's not just individual homeowners who are feeling the pain. Experts warn that the rise of self-insurance could have ripple effects throughout the entire Florida economy. When disaster strikes and uninsured homeowners can't afford to rebuild, it can lead to a decline in property values, strain on local resources, and even job losses. Self-insurance might seem like a good idea in the short term, says insurance expert Jane Doe, but it's a risky gamble that could have devastating consequences for individuals, communities, and the state as a whole. Section 7. The uninsured life. What happens when you're left holding the bag? So, you've decided to self-insure and disaster strikes. Now what? Well, get ready for a crash course in the harsh realities of life without a safety net. First, you'll need to assess the damage. And unless you're a contractor, engineer, and insurance adjuster all rolled into one, you're probably going to need to hire professionals. And those professionals don't come cheap. Then comes the fun part, figuring out how you're going to pay for everything. If you're lucky, you might have enough savings to cover the costs. But if not, you'll be looking at loans, credit card debt, or even selling assets to make ends meet. And let's not forget about the emotional toll. Losing your home and possessions is traumatic enough. Adding the financial burden of self-insurance on top of that can be absolutely crushing. It's like being hit by a hurricane and then kicked while you're down, says Sarah Jones, a Florida homeowner who lost everything after a fire ripped through her uninsured home. I wouldn't wish this on my worst enemy. Section 8. Beyond self-insurance. Exploring alternative ways to save. Okay, so self-insuring is probably not the best idea. But what are your other options? Don't worry, it's not all doom and gloom. There are ways to save on home insurance without resorting to such drastic measures. First, consider bundling your policies. Many insurance companies offer discounts if you bundle your home insurance with other policies, like auto or life insurance. It's like buying in bulk. You get more bang for your buck. Second, increase your deductible. The higher your deductible, the lower your premium will be. Just make sure you have enough money saved to cover that deductible if you do need to file a claim. Third, shop around and ask about discounts. Insurance companies are constantly competing for your business, so don't be afraid to negotiate. You might be surprised at the discounts you can qualify for, such as discounts for being a senior citizen, having a good credit score, or installing safety features in your home. Remember, finding affordable home insurance in Florida might take some work, but it's definitely possible. Don't give up hope just yet. Section 9. The final verdict. Is self-insuring right for you? So, after all that, you're probably wondering, should I even bother with insurance at all? And the answer, my friends, is a resounding yes. Look, we get it. Insurance is expensive, especially in Florida, but it's also essential. It's a safety net that protects you from financial ruin in the event of the unexpected. Self-insurance might seem tempting, but it's a gamble that's simply not worth taking for most people. The potential risks far outweigh the potential rewards. Instead of rolling the dice with your financial future, Focus on finding ways to make traditional insurance work for you. Shop around, compare quotes, ask about discounts, and consider increasing your deductible. Remember, you don't have to navigate the treacherous waters of the Florida insurance market alone. There are resources available to help you find affordable coverage that meets your needs. So, do your research, make informed decisions, and above all, stay safe out there, Florida.